Laidi is with us, Chief Global Strategist at City Index, and you probably do a mean quick step, I'd imagine. Ashraf, good morning to you.
Good morning.
Look, we've thrown the question out there, what was yesterday's sell-off in the markets about? We threw it out there to our audience, and a surprising number have come back and said it is not about the fiscal cliff. The fiscal cliff will be resolved. But one or two suggesting there are some things lurking out in the market 9 to 10 months away, and the market is already discounting that, and I presume that means slower growth and the prospect of further credit tightening. What do you think the sell-off was about?
That is true. The other thing is that the rebound that we saw, or the aggressive rallies that we saw after the combined OMT announcement from the ECB and from the QE3 announcement from the Fed, a rally that had yet to really be undone, was not really quite to be done until after the elections. A lot of people, when we were going into the payroll report, people were saying we're waiting for the payroll. It wasn't about the payroll. It was it was really waiting to see what is going to be the effective result of this very close, and the word is close, election. When it's close, it means it could go either way. And because it did not go into the side of the market, meaning in the side of a Romney camp, then there was that desire to basically to undo this rally. And obviously a fiscal cliff is a good reason because of the status quo in the House and in the Senate.
There was a view out there by some in the markets that this might have been an impact on the dividend story, that with Obama back in the White House, that he's going to be targeting the wealthy and stripping more away from returns to high-income investors and in the form of capital gains as well. So do you think that's why that could be one of the reasons as well? That
could be one of the reasons. And then the other thing would be really what would happen to the healthcare stocks, what would happen to the oil stocks if you're going to break it down by sector. That was also the negative story from there. But I really think that from the fiscal cliff, the reason that it is a big deal is that, as we know, if you're going to take away 1% of GDP from the United States, that may take away around probably 50 basis points from as much as in Europe, or 40 basis points from China. And then when you had basically the head of the ECB yesterday warning about a downgrade in growth for Germany. So the fiscal cliff is not just a domestic story in the 50 states of the United States, and it's really the erosion or the impact or the likely erosion that it will have on the US, on the rest of the world.
S&P still up 11% year to date. All these markets in the developed world are still significantly higher than they were 12 months ago. Let's put this sell-off to one side now. In terms of valuation, now, given everything you've said about the headwinds, are equities fairly priced at the moment, or is there a buy-seller hold on your agenda?
We think that from here into the next 6 months, we think that they could push higher. And part of the reason is that we're just to go back to the fiscal cliff, we're going to go into the negotiation stage, and that might not probably work. We're going to get to an extension stage. They're going to then extend the deadline into probably 6 months time, and eventually when and I'm taking the answer to the question back to the Fed, when the Operation Twist expires in December, the Operation Twist portion of buying of the bonds, then I think the Fed will going to have to continue, we're going to have to inject more of that liquidity, and that would be seen as a positive for equities. When you were talking with Sylvia about the ECB, as if the ball is in the court of the ECB, the ball is still in the court of Spain. Okay, and Spain still has to ask in order to trigger the bond buys. Just like back in last December, this December, oh, by the way, did I fail to mention about this country? The BOE is not expected to do QE today. But if December comes in and we're going to have a potential OMT and a potential BOE...
Let me just write me there. So the market's going up and it's going to be based on central bank action on both sides of the Atlantic.
Which could materialize in December.
Brilliant.
We'll continue our conversation with Ashraf in just a moment, but let's get back